Well, we had the IMF now recently warning that Kenya's rising public debt could perhaps pose a threat to economic growth going forward. Do you share this view?
Well, thank you very much, Mashudu. Definitely, that's a big concern, especially noting the fact that government debt tends to really affect the liquidity situation in the country, especially when it becomes local. But I guess what we are seeing right now in this unfolding is that the government is trying to borrow more out of the country so that it does not create more instability locally, and that's a fairly good move. But the challenge now is to make sure that it still manages the debt, so that even though it borrows more for long term as opposed to short term financing.
Indeed, when you look at the country's current account deficit sitting at about 13% of GDP, that's the second highest in the world, at behind Mongolia, which is at 15.1%. And the question here it would be, how are they likely to finance this current account deficit going forward?
Well, going forward, definitely there's a big concern. If you've been watching Kenya, definitely the last few months we've seen a lot of civil situations, or a bit of a concern in terms of strikes, because we saw teachers going on strike, we saw other civil servants going on strike, and because of that the government position, especially financing, has become a bit of a concern. And you also have elections coming up in a few months also. That is also creating a bit of a financing situation for the government, and so we are seeing them being in between a rock and a hard place. And because of that, I guess the finance department is really trying to make sure that it still strikes a balance to ensure that it does not create a bit of a concern, especially in terms of a risk level.
And looking at the elections, how much spending do you think will go into that? Of course, we've had a number of commentators saying that we could perhaps see government overspending given these elections are coming up next year.
Well, the spending on elections definitely is a major issue, because first of all we are experiencing a bit of a transition, because we're going to a new political dispensation, in the sense that we have a new constitution. You're going to be having a lot more legislators getting into office, and a bit of structural adjustments, and also quite a number of commissions that have to be financed. And so because of all these changes and transition, there is definitely a major concern in terms of spending, which we're already seeing, because we are planning to do a bit of a change in terms of how the electioneering process is going to go, things like transparency, and also making it electronic. And because of that, we're expecting a lot of expenditure on that front. And because we do not want to go the way of election violence, because we want to make sure that it's transparent, we definitely are going to have to spend a bit more.
We touched on the IMF a little earlier, and they was just saying that they've directed issues to the central bank, saying that they've asked the central bank to actually cut lending to the Treasury and commercial banks by about 40%, really to qualify for the next loan tranche. Do you see the central bank doing that?
Well, definitely, I think the central bank right now is going to have to comply, because looking at it in terms of goodwill, especially in terms of IMF funding and partnering with them, definitely that's a major concern. And also in terms of ensuring that it still keeps the scale balance, especially in terms of the local front, because I think right now, especially noting how we were at the beginning of the year, where the interest rates had really gone high and inflation levels were pretty high, I think the concern right now is to make sure that it does not tip the scale back towards the situation as it was. And also looking at it in terms of the foreign exchange market, where we are trying to make sure that it's still stable. I guess that's where the central bank is really going to have to really consider, trying to see whether it can be able to still keep that stable. Indeed,
when you talk about the foreign exchange market, looking at the Kenyan shilling, like you say, pretty stable. Could you give us some sort of outlook for the Kenyan shilling going forward? We do expect the central bank to come through and cut interest rates. We did have Marcel saying that we could perhaps see an interest rate cut of about 200 basis points coming through.
Well, if at all the central bank does lower the CBR, we should anticipate that the exchange rate will remain stable as they have continued to be. We are now crossing into November and also going towards the end of the year. And you're hoping that also we are going to get a bit of inflows, especially from foreigners and also from tea exports, which might still stabilize the shilling and hopefully keep the levels as they are, or even improve them going forward.